Hello Dairy Today viewers. On behalf of the Market 360 advisors here at Stewart-Peterson, I'm Bob Devenport, and this is your Dairy Week in Review for December 6, 2013. Well, it was a big week overall for dairy products. The blocks finished the week at 187 1/4, down 3/4 of a cent, but barrels finished the week at 183 1/4, up 5.5 cents. Cash butter finished the week at 164 1/2, down just 1/2 cent. January whey finished at 60 1/2 cents, up 2 3/4 cents on the week, and January non-fat dry milk broke into that $2 a pound level and finished 9 cents higher on the week. Going over to Class 3 futures, it was a big week for Class 3 as well. December rolled into that front month spot and finished at 19.08, up 61 cents. January was the big winner this week, finishing at 18.55, up 83 cents on the week. February settled at $18, even up 72 cents, and that now puts our 2013 average back at the $18 level, up 9 cents on the week. So now let's take a look at our weekly block barrel average chart. As you can see here, the block barrel average traded within a wide range this week. We saw some pretty big swings. The block barrel average again finished up the week though at 185 1/4, up just 2 3/8 cents on the week. But midweek on Wednesday, we did see a high. The block barrel average traded as high as 191 5/8 on Wednesday before being pushed down during Thursday's session and finishing up on a quiet note on Friday, again at 185 1/4. Those big swings that we saw throughout the week in cash helped to contribute to the big swings that we saw in Class 3 futures as well. But overall, the block barrel average continues to see some strength, continuing to be within this upward trend, putting in a series of higher highs and higher lows. So we'll have to see how next week plays out. If we're going to continue with this strength, it should continue to help support Class 3 futures as well. So let's jump into our second month milk chart here. Again this week, December rolled into that front month spot, so January is now our second month contract, and the January month was the big winner this week, up 83 cents on the week, and that's the third up week in a row we've seen now on the second month contract. The January contract traded as high as 18.82 this week and put in a low early in the week of 17.74. So at one point we were up over $1 on the week on the January contract, and that was on Wednesday before things pulled back slightly during Thursday's session, about 30 cents, but we took back some of that here during Friday's session and again finished up the week at 18.55 with that 83 cent gain. Now, given the strength we see in Class 3 prices here, things are looking promising for the future. Hopefully, Class 3 can keep up with this pace and continue to sustain these higher milk prices. The majority of the support, again, coming from the higher cash cheese trade that we saw this week, as well as a lot of strength out of whey prices and powder prices. We saw our latest export numbers out earlier this week, and these are October dairy export numbers. Now, exports for total dairy products for the month of October came in extremely above where we were at a year ago, up 26% from October of 2012 with a total of 182,192 metric tons. Again, we are significantly above where we were at year to date in 2012, and these extremely strong exports are what's really helping to support milk prices lately, as well as the byproducts. That's why we're continuing to see so much strength out of powder, and recently seen quite a bit of strength out of whey as well, which has largely been trading sideways for the majority of the year. That breakout in whey prices is definitely going to help Class 3 futures going forward if it can keep up that price action. So jumping into just taking a look at cheese exports here, as you can see here, cheese exports increased over October as well, and we're up 16.5% now on a year-to-date basis. As you can see here, just look at the spread between where we were at in 2012 with this blue line here and where we are currently at in 2013 with this green line. You can see that we are trending for the most part counter seasonally here. Generally, we seem to see a bit of a drop off in exports as we come into fall and into winter to finish up the year, but cheese exports has been remaining near the May high levels, and we've actually gone up a little bit. We pulled back, but we're still hanging near those high levels as far as exports go, and we have not seen that seasonal downtrend yet. So if we can keep up this pace again, that will help to continue to support Class 3 futures. So taking a look at the week ahead here, it's a big day as far as grains go. We'll have a crop production report and a USDA supply and demand report out on Tuesday, so tune into next week's video for a recap of that one. And that'll do it for us here today. On behalf of the Market 360 advisors here at Stewart-Peterson, thank you for watching and have a great weekend.